Everybody. Thank you for being with us. I know this is a topic that we've all been thinking a lot about since the spring, and again recently with the mailing of the assessment notices. So it was important that we get our people some information. We have the chief assessment officer from OPA with us this morning. He's going to give a little presentation, and then we'll have a guided Q&A. Yeah, I'm looking forward to hearing about this and having a conversation. So getting a little better understanding of what's going on. So I'm going to turn it over to James and Kate from OPA. And yeah, thank you again for being with us this morning.
Good morning. Thank you very much for having us. My name is James Arrows. I am the Chief Assessment Officer here at the Office of Property Assessment in Philadelphia. And also with me today is OPA's Chief of Staff, Kate McGlinchey. I have a brief presentation that I'll go through, just talking about kind of what OPA does, how we do it, some details about this year's reassessment. And then we can open it up for questions for anything that's not covered during the course of the presentation. So let me get my slides up here. All right, can everybody see the slides?
Yeah.
All right. So we're going to talk in some detail specifically about the tax year 2023 reassessment that occurred, but I'm going to start off with some general information about, who we are and what we do. So our mission as a city department is to value all real property in the city of Philadelphia for the purposes of ad valorem taxation. There's approximately 580,000 parcels of real estate in the city of Philadelphia, ranging from office tower skyscrapers in Center City to vacant land neighborhoods, or even accounts that aren't physically much of anything. They're air rights accounts that have certain, but they're considered real property due to certain rights associated with them. So anything that's real property in Philadelphia, we put a value on. We also administer abatement and exemption programs. So if anybody is familiar with the city's tax abatement program for new construction renovation, we do administer that. And we also administer certain exemption programs for institutional properties, such as government-owned houses of worship and other property owned by certain nonprofit entities that qualify for exemption from real estate taxation. And we are also the official addressing authority of the city. So if somebody's doing a subdivision or consolidation or looking to set up new accounts, new addresses, they need to come to us first and get those addresses from us before they proceed and file the deeds at the recorder of deeds office to put those new legal descriptions and accounts on the books. What OPA does not do is bill or collect real estate taxes. Now, you might say the slide before you mentioned taxes, and I did, but we are not the department that actually bills or collects or tells you what you are paying in taxes. That's the Department of Revenue. So when I say ad valorem taxation, ad valorem is Latin for at value. So what we do is estimate value for each piece of real property in the city, and then that's one equation that goes into what the real estate tax bill is. The other part of that is the tax rate that is set by city council to determine the overall city budget. And then our value multiplied by the tax rate is what your bill ends up being. And then there are some discounts you could have, like one of some of the exemptions before. If you have an abatement, it's your taxable market value that is calculated, not the full market value. If you have a partial exemption, same thing. And then there are other exemptions like the homestead exemption for owner-occupied properties, where that gets deducted off of your taxable assessment before your final bill is generated. So as I mentioned, we don't set tax rates or tax policy, so we don't determine how much the tax rate should be or why certain properties should or shouldn't be taxed. That's an issue that is taken care of legislatively. And then we don't determine ownership in the sense that we're not the city agency or an agency that would say, you know, two folks say they're the owner of a property, it's actually you and not you. We don't get involved in that. Tangle title issues, you know, those kind of things. The recorder of deeds is the one that holds all those records. They can help with that, but we're not able to say that one person, we're not going to weigh in on a legal matter, for instance, that says that one person should be the rightful owner as opposed to somebody else for a property. So for tax year 2023, we conducted our first citywide reassessment in several years. And our goal as an agency is to perform regular reassessments to ensure that our assessed values more accurately reflect sales and market forces, and to reduce value inequalities among comparable properties and ensure that comparable properties, similar properties, have similar assessments. So for 2023, we looked at the more than 508,000 residential, commercial, industrial properties in the city. And for most of those properties, we came up with new values, which will take effect for tax year 2023. Not every piece of property in the city received a new value this year, but over 90%, probably 95% did. So most folks are seeing some sort of change in their assessment this year. Now, we do what is known as prospective assessments. So basically what that means is we're taking information from the past and projecting forward to what a value might be as of a certain date. In our case, our effective date of assessment is January 1 of the tax year that we're talking about. So for the 2023 reassessment, we're doing a prospective assessment for an effective appraisal date of January 1, 2023. Now, obviously, we're not there yet. And because we certify our values in the spring, there's a little bit of a lag there between when we certify and when the actual date is. But we do take information up into a certain point, and as of the date that we're asked to certify by the state, we use the information that's at our disposal at that point to predict, in this case, what is a value in the future. Some counties in the state do it differently, where they take a date in the past and they say, you know, tax year is 2023, but the effective date of appraisal could be January 1, 2022. So if those of you that deal with properties more than just not in Philadelphia, but throughout the state, you might see different effective dates of appraisal for different counties, different jurisdictions. That's not mandated by the state when that has to be. But for us, we do it prospectively, meaning we're predicting into the future. And as I mentioned, this is our first reassessment, citywide reassessment in several years. The last citywide reassessments took place for tax years 2019 and 2020, which means that these assessments this year are capturing changes in the market for several years, right? So Philadelphia has been a place, like a lot of places in the country, that's seen a lot of changes in the market over the last few years. And we're trying to catch up as much as we can since our last reassessment. So folks, if they see a value change, we're not saying that your property increased or decreased in value that much in 1 year. It's just really pretty much that much since the last reassessment, which has a couple years worth of sales. And then these assessments capture sales through the end of 2020 with some limited sales information from 2021. As I mentioned before, you know, we certify in the spring for the following year. And in order to go through and project our values and review everything, that means we have to stop our analysis several months before that. So we don't have a full analysis through 2021. And we do have some 2021 sales information that will be that were used to formulate the values. But the bulk of the sales that were used in the process due to timing that we have to, produce our results is through the end of 2020. Some overall changes in the department since the last reassessment. We implemented our new computer-assisted mass appraisal, or CAMA, C-A-M-A system. And basically that's an enterprise-wide piece of software that allows us to put all of our information in one central repository. Prior to that, the city had a legacy system that dated back to the 70s and 80s, and some other ad hoc measures that we did to keep track of data and do some analysis. We've now integrated that into one system, which is really nice because when you have multiple silos for data, you can have discrepancies because if somebody doesn't update it in every single one, there's going to be differences in what one database says as opposed to another. So it's an industry best practice to have everything in one central repository, and we now have that. We created a sales validation unit. So prior to this reassessment, when we did sales validation to get to our analysis to do our values, it was spread out throughout the department. So the folks that were managing the individual accounts were the ones doing that sales analysis. And it was recommended to us that we centralize that in one unit for consistency and for accuracy purposes. So that way, the same kind of procedures and methods were being used over and over by the same people. Sometimes it's easier to have 10 people do one thing than to have 100 people do the same thing. So for quality and consistency, we centralized the sales validation into one unit. We hired additional data analysts to look at our data, clean the data, and come up with ways that we can use the data to project accurate values. And we also contracted with an outside vendor for some data collection and review on style and structure of properties, condition of properties from the exterior, and construction type and quality grade for properties. Some of which we didn't maintain or keep on our own, but we wanted to bring it in with our new system to see how we could have, if there's a possibility for some of those elements to impact value moving forward. And as I mentioned, these were coming from recommendations. So back in 2019, City Council did an audit of the office, and we also had an external audit commission. And so these changes were all recommendations that were made as part of one or both of those audits. So a little bit about the assessment process overall. We use mass appraisal to systematically reassess all properties with the goal of ensuring that assessments reflect current market conditions. So mass appraisal, what does that mean? So I'm sure most folks here are familiar with fee or single appraisal, which is one property being appraised as of a certain date and time for a specific purpose, most likely for lending, either for the purchase of a property or refinance on a mortgage. But it could be for an estate sale, it could be for a divorce, a couple different reasons why somebody might get a fee appraisal, but that's an appraiser coming out and looking at one property at a certain point in time and estimating the value based on comparable sales of that area. We do basically the same thing, but since we have 580,000 properties in the city, we have to do it on a much larger scale. So we use a lot of the same data elements that a fee appraiser would use, which I'll talk about in a little bit. But mass appraisal is basically taking large groups of properties in an area that have similar characteristics and projecting a value based on sales of similar properties in that area or similar areas. And as part of our overall process, we measure how our assessments compare to industry standards using standard performance measures to measure uniformity and equity between higher and lower valued properties. So when we value real property, what do we consider? So for residential properties, we're looking at a couple of primary things: size, style, and age of a property, right? So if you have a Trinity in Center City that is 200 years old or 150 years old, we're not going to compare that to a mansion that's maybe of similar age, but it's not the same kind of size or amenities. We also wouldn't compare that kind of property to brand new construction that is 5 years old and is it's completely new. There's no or very little depreciation to the building elements. Property's location and condition. So right, most important thing most people will tell you about a property's value is location, location, location. So we're not comparing properties, residential properties selling in the far northeast to those in Southwest Philadelphia. We're not comparing Center City to South Philadelphia, and the condition of the property. So if property hasn't been well maintained or maybe not updated in 30, 40 years, we're not comparing that to sales of properties that are new construction or that have been recently renovated or very, very well maintained over the years. And we take recent sales of similar properties in an area with consideration of the differences between properties sold and the property being assessed. So we look at several years worth of sales when we do our analysis in residential. We take that information, we dump it into some statistical models, run through the processes, and then come up with coefficients for each data element that we look at. And then we take those coefficients and those projections and apply them to the properties throughout the city based on the current characteristics that we have on file for those specific properties. When it comes to commercial and large multifamily properties, and when I say large, I'm talking multifamily properties that would be 5 units or more. We do still look at sales, but oftentimes it comes down to cost of operation and income generated, because these are income producing properties. Or in some cases, we'll use what is known as the cost approach, meaning that we'll take a look at the cost to acquire the land and the cost to construct, to either replicate or replace the current building that is there, and back into a value that way. The cost approach is really used for very special use properties that there aren't a lot of sales or income information. So take City Hall, for instance. There's nothing else really like that in the city, and city, as far as I know, doesn't plan to sell it anytime soon. So how that would go on the market, we kind of have to figure out what that cost of reproduction or replacement would be to come up with a value that that would be applicable to it. As we completed our reassessment for this year, during the reassessment, we brought these folks in, but they gave us some results at the end. And part of what we talked about earlier about external audits and the city council audit gave us some ideas on how to change and how to improve the department. But since those were a couple years old, we took the opportunity to bring in the International Association of Assessing Officers to do an audit of the department. And the IAAO is the group that kind of governs what we do as far as assessment on a worldwide basis. They're the ones that set the industry standards. They're the ones that give guidance. So we thought there's nobody better than them to come in and kind of do an audit to see where we are now, how this reassessment went, and what we could continue to improve on in the future. And as I mentioned, goal was to ensure that we meet certain industry standards and provide recommendations for possible improvements. We published that back in May of 2022. It's available on the OPA's website. And the audit found that OPA met industry standards for single-family residential assessments, which was an improvement over what some of the audits in the past had said. I'll just say as a broader thing, just because we meet industry standards on the assessments doesn't mean that any single individual assessment could be incorrect. So, but as a whole, the city meets industry standards, which is something that that we were able to improve upon from the last reassessment. So the notices of valuation for tax year 2023 began going out last month. Most folks should have received that notice by now. They started to mail the week before Labor Day. And for those that haven't seen it yet or maybe misplaced the notice of assessment, you can go to property.phil.gov and plug in an address and see there what the assessment is. There were 3 pieces of information that came with the that mailing that I just mentioned. So there's a cover letter which explains the notice and the options for filing an appeal. There's a notice of the valuation itself, which, as I mentioned, it's not a bill, but it shows you a comparison between what the notice was with what your value was last year and what it is this year. And then there's a first level review form that was with it as well. So one of the 2 appeal options is a first level review. It's an informal process, and I'll talk about that in detail in a second. But it's one of the options that if a property owner believes that the value that is on the notice is incorrect, they can use that form to request an informal review here at the OPA. So as I mentioned, the first level review is an informal appeal process that an owner can file for if they think the value is incorrect. And it was mailed with a notice of valuation. We do have blank forms available for folks that might have thrown it out or misplaced it. We encourage folks to use the form that was included in their notice, because if you've seen them, they come pre-populated with your ownership or the ownership of the person that owns the property. There's a barcode on there, and for folks sending them in, that helps organize and track the first level reviews much easier than getting a blank form and handwriting it in. We'll take either, but the more we get in that have to be manually entered by our processing vendor, it slows the process down as far as us getting the information in and beginning to react to it. So if you have the one that has the barcode on it, make sure you try to use that if possible. In filing for a first level review, there are 3 possible results that can occur. Your market value can go up, it could go down, or remain the same, meaning we looked at it and we said, we don't think there's anything we see here that indicates that the value is incorrect or a reason to change it, so it's going to stay the same. Now, that first one there, when I say market value can go up, that's not intended to scare anybody or deter anybody from filing a first level review if they think their value is wrong, but it's a possibility. It's very rare that we do increase a value in the first level review process when somebody's putting in an application saying that, you know, in most of the cases they're saying we're too high. But when we review your application or review the information on the property, if we correct something or update something, we have to value the property based on the information that we come up with. So if we, you know, have your house listed as 1,200 square feet and it's really 1,450, and you send us an appraisal that says it's 1,450 and it's worth more than what we have on it, and some folks are probably smiling, but we've gotten that. You know, we have folks that just say, I don't want my taxes to go up, and they send us an appraisal that came in higher than the value we have on it. And, you know, if it's just a difference in opinion, we're not going to raise somebody based on that. But if we look at that appraisal, for instance, and we realize, hey, we're undercounting square footage of a property, we're obligated to take that into account when we come up with what might be a new value for the property. It's very rare it happens, but it is a possibility. So I just always put that out there so folks understand it's not necessarily a free spin or a free roll of the dice where, oh, the worst that could happen is they don't change it. Very rare cases, it does go up. It doesn't happen often at all. And only properties that had a change in the assessment are eligible to file an FLR. So your overall market value doesn't necessarily need to change, but any whether it's your overall market value or any parts of the assessment itself, if they change from year to year, you can file for the first level review. Now, the assessment is broken down into 4 categories, which you'll see on the notice. So it's taxable land, taxable improvement, which is essentially, in most cases, it's the building or structure there, but there are other types of improvements that can be made to a piece of vacant land that would be calculated in that, but in you know 90% or more of the cases, it's the building that's there we're talking about. And then there's exempt land, exempt improvement for those properties that have exemptions or abatements or what have you. If any of those 4 element changes, and you would get a notice and you would be eligible to file the FLR. For that small group of properties where the market value did not change from year to year, you would not be eligible to file an FLR, but you would be able to file a formal appeal, which I'll talk about in a second. So the filing deadline currently for the FLR is October 14th, and that was extended from September 30th. We extended that last week, but folks that have their notices to this point and they're looking at the FLR form or the letter, it does say September 30th, but that has been extended as of now for an additional 2 weeks. We were notified that the Postal Service was having trouble getting all the notices out. So because of that time, we want to make sure folks had at least a month. And so due to the Postal Service delay and delays in general in the mailing around Philadelphia, we did extend that for 2 additional weeks as of this point. And then the other appeal option, which is the formal appeal process, is to file a market value appeal with the Board of Revision of Taxes. The Board of Revision of Taxes is an independent 7-member panel, and it's not a court proceeding or legal proceeding per se, but it's set up very similar to that, where if you request an oral hearing, both sides will present, you know, the information or present a case as to why they think the value should be this or that, and then the 7-member panel will come up with a decision and come up with a value, either leaving it as is or changing it. You can also request a non-oral appeal, which would be basically an administrative review on their end, and there's no worry about coming in and presenting a case on the record. It's not necessary to file the FLR first. And the deadlines this year are very close. And with the extension, it actually goes past the BRT deadline as it stands now. But we always encourage people to file the FLR as well, because there's a chance we could resolve the issue administratively, and then folks don't have to worry about going forward with the formal appeal. Because some folks do feel a little bit intimidated. They think it's a daunting process, and they would much rather just have a quick conversation with somebody and maybe get it resolved without having to come in and sit before that panel. So again, you can file one or the other exclusively. You can file them both. It's really at the discretion of the taxpayer, but if you think you might file a BRT appeal, we recommend filing the FLR too. And as I mentioned before, unlike an FLR, you can file a BRT appeal even if nothing in the assessment changes from year to year. The owners have that right every year to file with the board if they think that the value is incorrect. And the current deadline for filing with the BRT for the formal appeal is October 3rd. And then here, I just have a couple additional links for further information. The OPA website is phila.gov/OPA. Once again, the property.phila.gov website that I mentioned before, that is the city's property search application, where you can find details on the breakout of the assessment. OPA hotline is 215-686-9200. That's for questions about the notice, questions about a homestead exemption. The OPA does not maintain or manage the homestead or loop standing for long-term owner occupied program exemptions. Those are handled by the city's revenue department, but we do work very closely with them. When they do the approvals or they do a removal, they give us that information, and we help maintain that data as well. We're just not the agency that actually says yes or no in terms of an application or whether somebody qualifies for it. And then I have a link there for some real estate tax relief programs as well. A lot of folks, when they consider about filing an appeal or an FLR or looking at their assessment, they don't necessarily care about what the number is. It's what's the bottom line, right? How's it impacting my bottom line? What's the tax impact? And we always tell folks, if your taxes are going down, but you think your value is incorrect, we want you to file one of these with us because we want to get the data correct. Likewise, if your taxes are tripling, but the value is right, there's nothing we can really do with that because we don't manage the tax part of it. But there are tax relief programs out there for folks, and we just want to make sure that folks are aware of them and how they're managed, because we've had the homestead exemption for almost a decade now, and inevitably I always come across some folks that didn't know about it or don't understand it or whatever. So homestead is essentially, if you live in the property that you own or one of the properties you own, you can get it was raised to $80,000 this year off of your taxable assessed value before they do the calculation for real estate taxes owed. So all you have to do is certify that you own this property and that you live there. You can't claim a homestead in another state like Florida, or if you have your driver's license or car insurance set up in New Jersey, that would potentially disqualify you as well. But you just need to certify that it is your primary residence. And you would get that, if you're approved, you would get that $80,000 off of the taxable amount. So that's all the slides I have. We can turn it over to questions from the chat if that works.
All right, I'm gonna jump. I have a couple questions. I'm gonna try to guide this as much as possible. Jump right into it. What does a successful FLR look like? Right, like what does that look like on your end when I send in my FLR and I have my realtor run the comps and send, a couple comps? Is that like a stamp and bam? Am I getting a phone call? Like, what does that look like from the consumer standpoint?
Yeah. So
and how long does it take? Like
whatever your result is, you'll get a letter from us saying that here is the decision. And if it's a new value, it'll tell you what the new value is. Length of time will vary. And it really does vary on the number of requests that we get in. If we get 50 of them in, we got more than 50 already, but if we had 50, we could knock those out pretty quickly. If we get 50,000, we go through each one of those individually. So that would take a little while longer. What I would say for people that, if you're looking for what constitutes success as far as getting a value adjusted, anything you can tell us about the property, especially if it's information you think we may not have, pictures, or ask us to come out and do an inspection. If you have a recent appraisal of the property that details everything, and maybe the value is lower than what we have on it, or it's different, or if you recently purchased a property, if you recently purchased it, you're most likely have an appraisal at your disposal. Give us as much information as you can about the property to see if we're missing something there, right? And you were talking about, the comps, like I said, we're doing mass appraisal, so we're doing groups at a time. It's possible that there are some very specific reasons about a block or 2 or 3 blocks in an area or a property that it's not going to get picked up in the general sales of a larger area. Now, when I say larger area, we have divided the city up into approximately 600 different neighborhoods that we call geographic market areas. And so we really try to get as granular as possible when we're looking at the influences that the market has on a particular area. So we don't want to put 50,000 properties in one group and say they're all treated the same.
Sure.
They always say Philadelphia is a city of neighborhoods, and literally going from one block to another could almost create a completely different market in some cases. So we try to define those as best as possible. But in some cases, and in cases where there are areas that have very few sales or market transactions over a number of years, we do have to combine them into a larger group. Doesn't mean it's any less accurate, but you have the chance there that maybe there are some sales that are influencing it that don't have as much of a direct impact on the value of this particular property as some other ones that somebody might run a comp search on and come up with.
Sure.
But just be aware that, folks, if you're doing comp searches, try to make sure that the comps you're giving us are very similar to the property in question. We had somebody that said,
that's what we do for a living. I mean, that's what we do for a living. So,
no,
yeah.
I get it, but it's not necessarily for this particular group, but we get stuff in where somebody says, well, this vacant lot across the street is valued for less than what I think it's worth, so I want my house valued for less. Well, is your house valued correctly? If it is, then that's not an analysis, right? Oh, we'll use this property is at 80% of what it's sold for, and I'm at 92%. Like, that's not the kind of thing that we would say, okay, well, we're going to change you too. But those are some of the main points. Just give us information about the property. If you say, I don't believe in paying more taxes, or the city's overtaxing me, there's not really anything we can do with that. So
and I assume along that same line that, like, the financial impact or percent of the value change or the rate of the value change is an irrelevant data point. As far as
so what we're not going to do is say, oh, well, my assessment increased 100%. That's too much. Was it too much because our value is wrong? If so, we'll look at that. If it's you just think it's too much in 1 year, that we have to estimate what we think the fair market value.
Right. If the assessment's not wrong,
yes,
you're likely not gonna. Okay.
Exactly. Somebody's financial ability to pay a bill that they get, we can't take that into consideration.
Understood.
We can't look at who lives there. It's the bricks and the sticks. It's what's the property itself.
Okay. How many FLRs are you anticipating before the deadline? Is the city prepared for that volume? And, like, what's the turnaround time? I mean, is it you can't answer the turnaround time, or, like, what can people expect? Or is it strictly volume?
With the volume, I can't give you a turnaround time because we don't know what that final number is yet. We won't calculate that until the process is closed out. We certainly expect in the thousands, whether that's 5,000, 10,000, or 50,000. It's hard to predict because people are seeing large increases, and if they're reflexively filing an FLR without consideration of is the property really worth that, we could maybe get a lot. If people are doing the analysis and saying that it's a big increase, but the value makes sense, then we might not get as many. And it's hard to predict because there are factors other than the accuracy of the assessment that go into why somebody files an FLR and appeal. And it's just not something that we can really analyze how somebody's going to feel when this notice hits their door necessarily. It's an individual thing. So we always, we expect there to be, in the thousands for sure because of the level of change that people are seeing this year. But how high that ends up going, we don't know. And we're prepared to handle whatever comes in, but the volume will dictate how quickly we get through everything.
Okay. In terms of like, I guess just logistically, are we talking postmarked 1014 or in your office by 1014?
Either or, if you come down to the office and give it to us at 1014, that's meeting the deadline. If you drop it in the mail 1014, we will, if we got the postmark and we'll be.
I know that's a technical question, but like,
If they pull mail on that, well, actually that Monday is a holiday, I think, but so that if that works, it'll be like the 18th or whatever, we'll give some time for mail to come in because as we know, the deadline, the postal service is still having delays off and on in the Philadelphia area. So
if we're advising consumers, drop it off by 1014.
Yes, we're basically saying get it out, get it to us, or get it out in the mail by 1014. We can't control, nor can you, when it gets delivered to the box. We'll have some accommodation for that. But don't wait till the 21st to mail because you think that the mail, you'll get an accommodation because the mail is taking 3 weeks.
Okay, is there any chance of the formal review and the FLR review being the same deadline?
So the formal review, the BRT is that's set by the state. So every year the field deadline is the first Monday in October. We normally mail out much earlier, and the FLR deadline is much earlier, which gives time in between. And this year the mailing, we had supply chain issues with our vendor, like a lot of jurisdictions are having throughout the country. And we really, ideally, we wouldn't want the deadline to be this close because it can get confusing. We have some flexibility over extending the FLR deadline, which we already did once. The BRT really doesn't have that flexibility because that first Monday in October is a state deadline. It's not something that they control or that we control, certainly. So, yeah.
Do you guys have a system in place or a plan or a document for when a property value is successfully renegotiated and I need to alert my mortgage company of that? Is there the tax change? Is that going to be updated instantly on the OPA site, or what's the plan?
Not necessarily instantly, but as I mentioned, you'll get a decision letter.
Okay.
That will say, here's what the new value is. The mortgage company, and once that's updated, they could see it on the website. And once it's updated and hits the site, Revenue Department should have the updated numbers. So if a bill needs to be sent or a bill has been sent, they'll have the new value, the new tax amount recalculated based on what we do. Once it hits the website, it's usually at revenue by that point, or it's been a day, or it hits their system a day later. They are actually migrating to a new system in the next week or two. So hopefully the communication still works the same. There may end up being a lag, but it's usually once we finish it out and get it through and it hits the web, Revenue pretty much has it then or shortly thereafter. The letter may get to you a little sooner before you see it on the web, but the letter would spell out the new value, and you can provide that to your mortgage company, certainly, to give them a heads up that there might be a refund they need to ask for or a new bill coming if they haven't paid the bill yet.
Okay. What happens if, you said prospective assessments, if the market goes down next year, over the next 2-3 years, how often are these assessments going to change? Like what can we expect in that regard? If the market takes a hit, are people going to need to reapply or formal review or FLR every year? What's the...
Yeah, so our goal is to try to do regular reassessments. Regular could mean as frequently as every year. One of the major factors of that is kind of where has the market changed since we completed our last reassessment. So if we do a reassessment and the market pretty much stays flat for a year, we may not really do a reassessment because there's nothing that the market is telling us that is making us change our assessments. The market has been anything but flat for the last however many years, right? So one of the reasons people are seeing larger increases than maybe they've seen in the past is in those areas where the market has been strong. We haven't done reassessments in a couple of years, so it's capturing multiple years of change in the market in one reassessment. If we do that on a regular basis, whether it's every year, or even every other year, those changes tend to be much less dramatic. But if anybody files an FLR or files a formal appeal, you know, the value is as of January 1, 2023. If the market takes a change in February or March of 2023, we're not going to factor that into the 2023 assessment. But that would be, you know, applicable to any future reassessment.
Grounds to file an FLR come next fall.
Yeah, if we do reassessment next year and you get a notice and you don't think that value is right because the market has changed too much, then you could use that to file an FLR. Right. Just like we could reassess you every year, you could file an appeal every year, or if you're getting, you know, assessments every year, you can file that FLR every year as well.
Okay. One thing I want to understand better is land value, right? Because you guys, I guess it's a percentage, but you look at certain blocks all over the city and you have land assessed at $8,000 and you have land assessed at $105,000. Like, how do you handle that discrepancy? Is that grounds for an appeal? Like, and can you speak about non-uniformity a little bit?
So when you say land, are you talking about vacant lots or land as part of the assessment?
I'm talking about the land assessment portion of the assessment.
So for residential properties, land is assessed at 20% of the overall value.
Period, point blank.
Period, point blank.
Okay.
There's different ways you can do it. I know folks are saying, well, you should use a rate per square foot based on what lots are selling for, but we don't do it that way because you're basically estimating a use of the property that it's not in place, right? It's not vacant land. Once it's not vacant land, that value does change from what an unimproved developable lot is. 20% is kind of an industry standard used across the country. So we used to do it in a way where we would apply a percentage based on location in the city and the condition of the property. So if a property was dilapidated and falling down, it might make more sense that more of the total overall value is in the land because you might want to knock that building down and build something new, for instance. Folks found that confusing. They found it hard to understand. So we moved to just a flat rate of 20% for the residential properties in the city. And commercial properties generally will have a flat rate for a certain class of property. It's not necessarily 20%, but
okay, yeah. So if somebody owns new construction and a tax abated property, and their land is assessed at $100K, and their neighbor is living in a $250,000 house, and their land is $50K. Is there grounds for an appeal there if you own new construction?
No, I mean we would not do anything with that. When we would look at the overall value, you know, if the overall value is wrong, we can make an adjustment. Okay. And so the other thing,
it's just a percentage.
Yeah. So it wasn't in the slides, but I can explain quickly. So when we come up with the overall value, we don't estimate a land value and estimate a building value and combine them. We take all the factors and come up with a value overall and then break it out. So we apply that 20%. So if you say, hey, my land is being assessed at 35%, that might be something where you say, okay, you know what, that should be 20 like everything else. Okay. But if you're 20%, your neighbor's 20%, and your values just are different because your overall value is different, we're not going to adjust.
You're not going to look at that. Okay. For 2024, right, if the market shifts drastically, but my assessment doesn't change, I have to do a formal appeal as opposed to an FLR, correct?
If your assessment does not change, you can do that formal appeal to the Board of Revision of Taxes, but you would not get a notice and you would not get an FLR for that year.
Interesting. Okay. There's a question here as far as like square footage and numbers of beds and bedrooms. Like, does that matter? Like, if Public Records has it listed as a 3-bedroom house, but it's really a 2-bedroom house, but the square footage is the same. Like, is that a reason to put it in front of you guys?
Beds and baths specifically would be no. We do have information on record, but those elements are not specifically used to calculate the value. Livable square footage would be. So if the square footage is the same, you know, some people knock through and make 2 bedrooms instead of the 3. If the square footage is correct, then that would not necessarily be a basis to put the FLR in, because we use the livable above grade square footage as a whole, whether that's 2 or 3 bedrooms. We do have those elements online, like you mentioned, but a 2-bedroom versus 3-bedroom is not part of the analysis we do when we do the mass appraisal. It's the livable square footage above grade.
Okay, I know you said this earlier, but in terms of ownership and the homestead exemption, that's really not you guys. That's revenue and taxes.
I mean, we don't determine the legal ownership. So if the property.bill.gov site shows incorrect ownership, we can update that. But if you're applying for a homestead and revenue sees a discrepancy in ownership, that's outside of what we handle.
Okay. And just to clarify, you said beds and baths don't affect the valuation? Like if there were...
Yes, that they're not an element that we consider individually. But if you have a 5-bedroom home, it's obviously going to be of a certain square footage. That total square footage is what?
Well, but if I added 2 bathrooms to like if I had a 3-bed, 3-bath house,
yeah,
instead of a 3-bed, 1-bath house, that would affect.
If those bathrooms didn't add actual square footage to the property, so like, if you didn't bump out on the first floor to create this bathroom or whatever, then that wouldn't be the 3 versus 1.
Same thing of a finished basement, or would that count as
additional? We don't count below grade square footage. So whether that's an unfinished basement or a finished basement, that's not counted as livable area or an element directly affecting the value that we specifically account for.
Okay. So yeah, I'm just going to go back. If like, what's the single most compelling, like if I want to advise a client on how to have a successful formal review or FLR, what's the most compelling piece of data that I can put in front of you guys? Again, what are you looking at, right? If I'm like, this is wrong, like, is it my neighbor's recent sales? Like, what's the most compelling piece of data to win a appeal?
I would say the compelling arguments that cause us to probably make adjustments most often is we have something wrong about the information on your property. The building square footage is too much. The condition is incorrect. Those are the, if you can prove that or show us that, that's the most likely scenario you'll see an adjustment. But if you're running sales, or you can find sales of similar properties, again, and we really are trying to compare apples to apples, oranges to oranges, but identical homes are very, very similar homes in the area. What they've sold for, if they're arm's length transactions, and hey, nothing is selling for what you have my property valued at, we'll take a look at that. So correcting data is probably the first and most important way people get their assessments adjusted. And then the second is, an analysis of sales in the area to say like, hey, nothing is sold for this much in the last 3 years, let's just say. So it's probably, maybe might be a little high. Those are the two things that usually result in success the most. We are more than happy to come out and do an inspection of a property, measure it, take a look at anything. Most folks don't request or really want us to do that, but we're more than happy to. We want to make sure our records are correct. And if there's reason for somebody to think they may not be, we're happy to come out and do that.
Right. Okay. So like my neighbor's house sells for $600,000 and they've got brand new kitchen, fully renovated and whatever. And my assessment goes up substantially because of that recent sale, but I haven't updated my house in 20 years. Mm-hmm. How do I convey?
Yeah. So that's a good point. That goes back to what I talked about earlier with condition and apples to apples. So we're not taking the sale of the renovated property and using that to come up with a value on a property that hasn't been updated in 30 years. We're looking at sales. When we do the sales analysis and it goes through that modeling process, it picks up condition. So when we see that sale and we see that it's been completely renovated, we mark that as a property that was completely renovated, for instance, at the time of sale. if your property we have as average or below average condition, that sale, we're not taking a factor from that sale and applying it to your home. We're looking at homes in your area that are of the same age and of the same condition to see what they're selling for. So if properties, if the renovated home sells for 600, we're not putting if we have a property in average condition, let's say, we're not putting that at 600 because that one did. That property is going to be less, most likely, depending on what people are paying for properties in that condition.
And what is the condition? How does the robot, the algorithm, deem condition on properties that have never been? I mean, like, how does that work?
So the robot doesn't do any of that. The robot takes the data that a person actually, calculate or reviews. So I mentioned the sales validation unit. We get sales records in from the recorder of deeds office when somebody records that deed in the transaction. Those come in, we go through those transactions and try to see what the property was at the time of sale. Okay, we have it as a lot, but this is now new construction. We need to update what the characteristics were at the time of sale, where this property was renovated. We see that there's 10 permits on it. It's no longer below average condition, it's renovated. We get the records, as I said, as they come in, and then that sales validation unit that I mentioned, they go through the records and, match up what we have as far as data on the property versus what it appears to have been at the time of sale. And then that information goes into the robot that calculates the values based on that. But the information as to what the condition is or other elements is reviewed by a human being.
Human input. And that's where appealing based on the condition and
So, if your property hasn't sold for 40 years, we're not going to have a recent sale on it. We may never have been in the property. We may drive by and say, oh, it looks nice from the outside, but the interior is very old or there's issues. Like, we're not going to know that unless you tell us, hey, here's the issues, come out and take a look. We're happy to do that. And
you guys have literal people driving around the city looking at houses and
we have so that's we get that in two ways. We have our evaluators go out in the field regularly, either by request or for specific reasons or just to review data in an area. And we also have very detailed imagery that we have at our desktops here in the office. So if you know Google Street, we have a much more souped up version of that with excellent pixelation that we run on a yearly basis to where you can see how a block looks year over year. And then we also have aerial photography that's run every year. So we can get top down views and say, oh, well, this property's falling down in the back. You can't see that in the street, that sort of thing. And we can even measure the properties virtually. And it's down to literally like inches in some cases.
My roof
to be accurate.
Bizarre. Where do you pull your recent sales data from?
We get the records from when a property is sold and that's on the deed, it comes over from the Department of Records. So we get those transactions and then we'll see what we have on the property. We'll look at imagery and we'll see if there's permits or if there was a listing on the property, what information might be pulled from that from a public site. But
so it's not the MLS.
No, we do not have access to the MLS. We did for about a decade ago, but folks were not happy about that, so the MLS pulled our license about 9 years ago.
Yeah, I don't know if it would be a good thing or a bad thing, to be honest.
I could argue either way, but we don't have time.
Yeah, I could probably go either way on that. Is there anything else here? I'm gonna wrap this up in like a second. I'm just looking to see if there's anything I missed. I guess I see it in the chat, but if I lost my notice, I can go to the office or request one on the hotline.
Yeah, call that. You can come down in person or call that hotline number. It should still be on the screen now, and they can get you a blank form. Well, I'm sorry. When you say notice, if they're looking for just what the value is, go to the website, property.fil.gov. If they want that FLR form, call the number or come down to the office. Okay. And it's not on here. We're physically located at the Curtis Building, so 601 Walnut Street, Suite 300 West. If you come down here, take the west elevators. So the doors closest to that are the doors at the corner of 7th and Sansom. But take the west elevators up, and we're right there on the 3rd floor.
Okay. And yeah, I mean, I guess like, right, if somebody bought a property for 300,000, but it's assessed at 500,000 and they do an FLR, is that gonna get like reduced? Is that a reason for reduction?
Quite possibly, you know, assuming that nothing has changed about the property since they purchased it and it was a very recent purchase, that's definitely something we look at and say, okay, maybe we need to make an adjustment to this value.
Okay. The location.
But the one thing I would say in general is that obviously one sale does not make a market. So if everything else similar to that is selling for 500,000 and you just happen to get it for 300, we're going to say there's 10 sales that say it should be 500. Yours is at 300. Those are the rare cases, but you know, people think I paid for this, it can't be worth any more than that, depending on how long ago that sale was. And if there's 10 sales since then that say that looks like somebody would pay this now for your property, there's a preponderance of evidence that the property may be worth more than maybe what you bought it for in a case like that, but that's fairly rare.
And if I haven't gotten my notice yet, and I am like, believe, you know, well, let's just, yeah, if I haven't gotten my notice yet, what should I do?
If you haven't gotten your notice, you know, you can go to the web and check to see if your value changed. And like I said, most cases it has, some cases it has not.
Right.
There's about 10,000 properties that did not get a notice in this round that are going to be slated. There were some ownership issues and some homestead issues that need to be cleared up with the revenue department. Those will be coming out, and then those will have a slightly later FLR deadline. But again, that's maybe like 10,000 properties citywide, so it's not a lot. But check that website, because if the Postal Service still has it delayed, then you know, you can at least call and say, can I get an FLR form?
Right. I mean, that's my question, right? If I know my assessment and I want to appeal or file an FLR, but I haven't received it in the mail yet, calling you guys or coming down to the office is the best thing I can do.
Yeah.
All right. Cool. All right. I think that pretty much covers it. I'm sure we could keep going. Matt, did I miss anything? Do you have anything you want to add?
No, I think we're out of time.
I appreciate you being with us, and yeah, in front of the firing squad.
All right, everyone.
Thank you for having me. Always happy to talk and hopefully answer some questions.
This was informative. Absolutely.
All right. Thank you, everyone. Remember, tomorrow, agreement of sale, 9 a.m. See you there. Take care.
Thank you.
Thank you.